Are you tired of your savings? Just sitting there, barely budging, despite your best efforts? Do you ever get the feeling that the big banks, well, they're not exactly shouting about all the ways you could be growing your money faster? In this video, we're doing something different. We're pulling back the curtain. We're revealing 5 little-known loopholes that banks often, let's just say, don't actively advertise. Okay, here's 5 little-known loopholes, spoken with a knowledgeable and slightly mysterious tone, adjusting the pacing and emphasis for clarity. Our first hidden advantage lies in where you park your cash. While the familiar names of major banks offer convenience, their savings rates often, well, they leave much to be desired. The secret? Explore beyond the obvious. Smaller online banks, credit unions, and even new banks frequently offer significantly higher annual percentage yields. They operate with lower overhead and can afford to reward your deposits more generously. It might require a little extra research, perhaps managing accounts in a couple of places, but the long-term growth, it can be substantial. Next, a seemingly insignificant feature that quietly works wonders: the roundup. Many modern banking apps and some traditional institutions offer this. Each debit card purchase you make is rounded up to the nearest dollar, and that small difference, it's automatically whisked away to your savings. Banks don't necessarily push this hard, perhaps because those tiny transfers, unnoticed individually, accumulate into surprisingly large sums over time. It's passive saving at its most effective. Our third revelation takes us into the realm of credit unions. Unlike profit-driven banks, these are member-owned, community-focused, and this structure often translates into tangible benefits for you. Higher interest rates on savings, lower fees, and even profit sharing in the form of patronage dividends. Membership might be based on your location, employer, or affiliation, but exploring these options can unlock a financial ecosystem designed to benefit its members, not just shareholders. Now, let's consider a more strategic maneuver with certificates of deposit. Locking your money away for a fixed term often yields higher interest, but the key here is in the structure: CD laddering. Instead of one long-term commitment, you divide your funds into multiple CDs with staggered maturity dates. As one matures, you reinvest. This clever approach balances the higher returns of longer terms with periodic access to your capital. It requires a bit of planning, but it's a sophisticated way to maximize interest while maintaining flexibility. Finally, a principle, not a product, but perhaps the most potent loophole of all: pay yourself first. Before the bills, before the spending, a portion of your income is automatically directed to your savings. Banks don't actively promote this fundamental shift in mindset, perhaps because it prioritizes your financial future over readily available spending money. Setting up those automatic transfers, making saving a non-negotiable habit, that's where true, consistent wealth building begins. These 5 loopholes highlight strategies that often go under the radar, but can significantly benefit your savings and overall financial well-being. They require a bit of proactivity and exploring options beyond the most obvious or convenient choices.